Joining me now in a TV exclusive, LendingClub CEO Scott Sanborn. Scott, great to have you here on the show.
Thank you for having me.
So you were president when this happened. I know it's been a long year for you. Talk to me about what the path to recovery has been like from within.
Yeah, it's really been about investing in the foundation of the business and putting in the right controls and bringing investors back to the platform. A critical piece of that is banks, and we announced that in Q2, 44% of our funding came from banks providing capital to fund the loans on the platform.
When it comes to the scandal that you've now moved beyond, I mean, do you feel like the company is back in a good place?
Yeah,
is it completely behind?
I think both the results we delivered this quarter and what I just talked about is having our investors back on the platform are both clear signs that we are looking ahead.
So your main competition is credit card companies. No small opponent to take on. Where are you gaining the most ground?
So if you look at what's happening in the broader market right now, there's over $1 trillion in outstanding credit card debt. So more than half of Americans have had credit card debt in the last 12 months. What we're doing is saying, look, if you haven't paid off your credit card, you have a loan, and it's probably not a very good one. And in general, we make it very easy for them to save, on average, about 24% in interest versus that product. So that's really the core audience that we're going after.
This also suggests, though, that lending standards could be getting looser, right? I mean, where do you think we are in the credit cycle?
So,
because $100 trillion in outstanding credit card balances is as much as before the financial crisis.
It's actually higher, yeah. It's higher. So one of the powerful things about our model is we make all of the performance on our loans publicly available, so our investors can actually see for every loan we've ever issued, both over 100 credit attributes for that loan. So what does it look like from a credit perspective, but also what's the payment history. And what we are seeing, which we talked about, is we did see deterioration in credit performance about 18 months ago. We started talking about it. We took very swift action, and what we're seeing right now is stabilization in performance, and our loss rates and our, most importantly, forecasted returns for investors remain in line.
So when do you think we're going to start to see things turn? Will we start to see things turn?
So that's obviously pretty hard to predict. I think what you're hearing right now is in certain markets, the auto market is starting to see signs of deterioration, as is credit card. But on the flip side, you're still seeing a lot of things to like in the macro environment for consumers. Unemployment is very low, inflation remains low, oil prices remain low, household formation is up. So these things are counterbalancing. I think the thing to watch here is consumers' ability to service the debt that they've accumulated